Good morning, everybody. Hey, welcome to Wednesday, August 19th. Man, this month is flying by too. Summer's going to be over. I know the kids are already back in school. So, um, man, the year is just flying by. Even with all the stuff that's going on, we continue to see the days fly by. So, hey, you know what? The markets were a little mixed yesterday. We'll talk about that. Not much on the economic front today. Got some good earnings reports coming in today. You'll want to stick around for that as we get ready to share with Dave and see kind of where we are, where we may be going for the rest of this week and maybe for the rest of the month. So, hey guys, I want to thank you for joining us today. Remember, this market is sky high. Are you prepared for the next downturn? That's the question. Give us a call. Let's schedule your financial x-ray, 863-382-0037.
FM is on radio. Morning, Dave. Is the bozo here behind the microphone. It's 8:40 now, 20 before 9. Time to check in and see what's happening to your retirement funds on Wall Street, or anything for that matter you got invested. Pretty good day yesterday. Let's analyze what the Sam Hill went on with the help of Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, we had two records yesterday. The S&P and the NASDAQ both hit new record highs. Happy days are here again, right?
Well, you would think so based on what you're seeing in the stock market, right? But
Yeah.
what are they really saying? That, you know, a lot of the folks are saying the reason we're getting these numbers is there's no place else to put your money. You know,
That's kind of the gist of one of my headlines this morning.
Yeah.
I mean, you can make more money stuffing it in an old sock than in federal bonds right now.
Well, that and the banks aren't paying anything. So people are being forced to take risks that they don't want to take to be in the stock market. So, I mean, there are other alternatives, but not the mainstream media even talks about. So I mean, that's one of the things that we look at here at Statler Financial is making sure that we got that balance between risk and safety.
Absolutely. The risk is up there as we start getting into nosebleed territory on things like the NASDAQ and the S&P. And I'm not trying to talk things down by any measure. One of my tip sheets says there's actually room for more growth in the Standard & Poor's. But still, I look at the earning per share numbers, and we're more optimistic than I necessarily think we need to be. Wouldn't you agree with that?
Well, I think in terms of the stock market, yes. But one of the articles I read talked about consumer sentiment, and you know, that's a big part of this whole thing is how does a consumer feel? And they're not feeling real good right now, Dave. I mean, it's not the worst we've ever seen. You know, it doesn't quite live up to the 2000 or the dot-com bubble or the financial crisis in 2008, but it's getting pretty close. The other point that the article made was that the labor participation rate, the people working, is the lowest we've seen basically since the Depression. And so it's going to take a while for those jobs to get back going again. And I was listening to Mohammed Al-Arian the other day, and he's an economist and an analyst and guy that I has done a really good job of looking at things. And you know, that's one of the things he said is, you know, the stimulus is dried up now. And so what are we going to do? Because without stimulus, the consumer sentiment is going to stay low. We can't spend money. So it's going to impact the economy.
And our friends in Congress are busy arguing about the post office instead of about doing something for a renewed stimulus, whether that's good or bad. So the amount of movement afoot really isn't much of anything to encourage consumer confidence either.
No, it's really not. It really gets kind of, you and I get frustrated with this whole situation.
Oh, yes. Congress spends a lot of its time with its finger in a dark place instead of actually doing anything. I guess the rationale for this is they've always said the stock market and the equities in general are a leading indicator that indicates optimism that our not V-shaped but probably U-shaped recovery will happen. But we always have to throw that fly into the ointment that, yeah, we still have a whole potload of people that are out of work, and some of them are not going to be going back for a little while as we keep watching this bug go through the country.
Well, that, and, you know, if they do, you know, stay at home, you know, they've lost that $600 weekly amount the Fed was kicking in. And so what are they getting now? You know, a couple $100 maybe. And so that's a drastic difference.
Absolutely. Our unemployment system in Florida it's getting fixed, we'll say that. But one thing is for sure, we're not among the more generous states. We're looking at a couple of $100 a week worth of unemployment. That doesn't make the mortgage payment, people.
No, it really doesn't. I saw the article said the average across the 50 states is $300, and we are, I know, below that number. I mean, we're not as low as I think Mississippi and Louisiana. Maybe I saw in the article that's down at $200, but we're somewhere in between there.
It's not the league I necessarily want to be into. I'm not worried about being unemployed, but I really feel for the folks that are getting slapped with that. So that's the way we start out, a little bit of a dip in the confidence level that the consumers feel in the economy. No movement in Congress, and today we're going to find out how serious the Fed really was at their last meeting about watching things and being ready to do anything it takes, because all the green eye shades go crazy about 2 this afternoon, and they released the minutes for the last Federal Reserve Board meeting. You think we're going to see any movement off of that?
You know, Dave, it depends on what it says, right? I mean, it really is going to depend upon what it says. And if they just keep the status quo, I don't think so. I don't think we'll see any movement. If they come out with something, you know, radically different, then depend upon whether it's beneficial, the economists see that as beneficial or not will depend upon what happens to the markets this afternoon.
And the thing that people watch for all the time out of these minutes is whether or not it's close to unanimous or whether or not they actually had an argument before they made the decision and the statement that they ended up making. The last the last Federal Reserve statement basically said we'll do whatever it takes. And if a lot of the Fed governors in that meeting said, whoa, back off, let's not promise what we're not planning on delivering, that could provide a downtick on the market.
It could. You're right. It doesn't, you know, they like everybody to be in an agreement when they see those minutes.
If the decision's something they like, at the very least, they like them to be in agreement, right?
That's right.
So, we do have some companies reporting earnings, and judging by what's happening to Target, unless there's one of those up is down situations, I gather Target had a pretty good quarter, huh?
Oh man, did they ever? Yeah, I think they said it's the best quarter they ever had.
Wow.
They more than doubled their estimated earnings. It came in at $3.38 a share. Revenue was up. Same store sales were not quite 3 times what was expected, but it came in at up 24.3%, which was a record for them, compared to the 7.6 that was expected. I like this. Digital sales nearly tripled from a year ago. So they've been able to get their online stuff up and going and moving well. And they're trading up 7.75% this morning.
That was why I was saying, unless it's an up is down situation, it had to be a good report because they're on the top of my big winner list this morning. That's interesting news because in a quarter in which the brick and mortar stores had so many problems, Target did figure out how to do pickup at the store and electronic delivery much better than many of the other major retailers, didn't they?
Yeah, they really did. Listen to this statistic. So their stock price from a year ago, 12 months ago, is up 62.5%.
Crud. That starts rivaling bubble numbers even on an individual stock, doesn't it?
Yeah. That's just that's crazy.
Another big household name that I see toward the top of my winner list this morning is Lowe's. Is that another piece of good news?
It is. It is another piece of good news. Not quite as good as Target, but still pretty good. They beat their earnings per share by 80 cents a share. They came in at $3.75. Revenue was above forecast. Same store sales, not quite as good of a percentage increase as comparable to Target, but they were up 34.2% on same store sales, better than Target was from that standpoint, but they were expected to be up 16.3%. So almost double that deal. And they also, like Target, have done a really good job in their digital sales. They were up 135%.
Wowzers. You
Yeah, so
can survive. You can survive in this economy, can't you?
you got to be, agile and make the adjustments need to be made. But they're up 1.75% today, and they're right now they're right at their 52-week high.
Cool. Those two stocks alone might very well be providing some of the positive impact on the Dow this morning. Anything else that we're seeing
So
for indications from companies?
so we have two more. So I have Lazy Boy. Lazy Boy did better than expected. I mean, a 360 change. They were expected to lose 18 cents a share. They actually made 18 cents a share. So a good thing there for Lazy Boy. They did not their revenue did not come in as expected. Their sales were down 31% for the quarter, but they are seeing a boost in summer sales. So some good news there. And they're trading up almost 2% this morning.
All right. One more.
Last one I have is TJ Maxx. So TJ Maxx did a little better than expected. They were expected to lose 18 cents a share. They actually lost 10 cents a share. So that was a little better than expected. Revenue was short. They are trading down today a little over 5%.
All right. Somebody had to have a little bit of a fly in the ointment.
That's right.
Resetting the table for the morning. Dow was a little bit of a laggard yesterday. We're off by a bit, but NASDAQ and S&P both ended up with new closing records on Wall Street. Can we keep that momentum going 45 minutes early? Where are we heading, Phillip?
Yeah, we got a mixed bag this morning, Dave. A lot of things are pretty close to, I'd call them even. The Dow is up less than 1/10%. The S&P 500 basically is even right now, and the NASDAQ is down 1/4%. So a little bit of mixed emotions there. On the commodity side, we see nothing but red. We got silver down 1%. Gold is down 0.7, back below $2,000 an ounce, and crude oil is down 0.9% to $42.72 a barrel, which is really about where it was yesterday, Dave, when you and I spoke.
Yeah, memory serves, it's actually a little bit up from yesterday, but still, it's not showing upward movement day to day, is it?
No, it's not. It's kind of holding its own right there in that $41, $42, $43 a barrel,
which we can kind of live with for the short term anyway. Asian markets mixed overnight at the close early this morning. Europe generally trading upward off of our enthusiasm midway through their day. Phillip, you can make money, like we were saying. Some of the businesses are agile enough to be able to do well. Others, not so well. Sometimes that takes a neutral party in order to help a person ensure a stable retirement fund. How do I get a hold of you to get those eyes?
Hey, Dave, it's a great opportunity with these markets hitting all-time highs is to make sure you've got that allocation right between safety and risk. Give us a call for our financial x-ray, 863-382-0037. Hey, we got Statler Friday with Phillip coming up this Friday, 11:30. You can register by going to our website at statlerfinancial.com under the events tab and click the registration tab there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
I got to remember the Fridays with Phillip again. It's a new return, so I keep forgetting to cross plug it.
Yep, it's coming up this Friday, and then I'm on vacation for a couple of weeks. So we'll do two though. We'll do it 2 Fridays in September also. That
sounds cool. Statler Financial Services, making Zoom intelligible, right?
That's right. I mean, it's a great time to come get your questions answered and get an economic update.
I got you. We will catch you tomorrow, sir. I appreciate it this morning.
All right, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. I want to again thank you for joining us today. Please remember, Friday with Phillip, this coming Friday, 11:30. Hey, go to our website, statlerfinancial.com. Under the events tab, register there. We look forward to seeing you there to get all your questions answered. Have a great day. I look forward to speaking to you again tomorrow.